Jessica Dupee. Finally get you in here. It's a pleasure.
Yeah, thank you.
And we've got a lot to talk about. You've got a lot to talk about. I have some questions, and you've got...
I'm sure you do.
I do. A lot about taxes. And I think people want to hear this. You're so interesting, the conversations we have on the phone. Because I've been in business for a long time for myself, 40 years now. Yeah, almost 40 years, like 38 years. So understanding tax, the tax code is extremely complicated, and someone like yourself really simplifies it for people like me who just want to do business. But first, I want to find out who, and I love your maiden name too. It is a movie name.
You think so? Yeah, I didn't love it when I was younger, but...
It's awesome. Jessica Sledge?
Yeah.
I mean, that's, what do you think of? A crime fighter, a superhero, right?
Yeah, something like that. I used to get called Sledgehammer a lot.
Yeah?
So, yeah, that's always been, a nickname of mine, but...
That's not a bad nickname.
No.
It's got some punch to it, right?
Yeah. I was a different person back then, though.
Yeah?
So.
It all formulates to where we get as we become adults. It all helps to build the character who we are. Always remember that. So I always tell people, never be embarrassed of your past. Well, most of your past. But anyway, never be embarrassed of your past. It helps to formulate who you are today, and helps to give some people more grit, more fight.
Absolutely. Yeah.
And I personally don't care to be around people who have no fight in them at all. If I want that, I'll get a Shih Tzu and I'll pet it on my lap. And even they have fight in them.
Oh, yeah. Yeah, some of those small dogs.
Speaking of Jessica Sledge being a great movie name, and I'm sure you can license that to someone who wants to use it, right?
Okay, sure.
Okay. What is your favorite movie of all time? I threw you with that one, didn't I?
Oh, probably Shawshank Redemption. That's one of them. It was my mom's favorite too, so we used to watch that together a lot. Definitely one of her favorite movies. You did throw me off with that one.
You were going right into taxes.
Yeah.
And here we go to the movies.
Yeah.
Because, all of life is based off the movies.
Well, surprise. That's probably it.
That is a favorite of a lot of people because of the complexity of the story.
Mm-hmm.
And they have a festival in Mansfield, Ohio, the Shawshank Festival.
No, I did not know that.
Yeah, and I guess that's where the prison was, I believe.
Okay, yep.
But they do have a festival for the movie because it's such a favorite. It's become a classic, really. And it is a great movie. It's got a lot of emotion in it and a lot of twists and turns.
Yeah.
So kind of like life does, right?
Yeah. I just love the actors in that movie, the characters in that movie. Yeah, it's really good.
It's a good movie.
That's just the only one that's coming to my mind right now. And I do, I have a lot of favorites in a lot of different, genres or whatever, but that's the only one I'm thinking of right now.
You like romantic rom-coms?
Of course I do. Yes.
And, as we've talked, when I asked you that first, what genre do you like?
And I like that.
Mm-hmm.
I do like those because as we talked about, like, my work is pretty heavy, pretty serious stuff. So when I'm watching TV, sometimes I just want something light, Well,
those movies offer you an escape.
Yeah.
Escape from the reality, which in your world is very serious.
Yeah.
Accountants are, it's something that's, I always say in life, you have to have these people around you to have a full circle for a good life. And that is, you have to have your mechanical people. You have to have a good mechanic. You have to HVAC, plumbing, electric, building. You have to have those people, right?
Mm-hmm.
You have to have a good doctor, a good lawyer, and a good accountant. And if you have all these people in place, there's other people too. And I'm not discounting, like, we all have to have farmers and all that for the food. But if you have those people in place, you help them, they help you, you got a tight little unit. You got a team.
Yeah.
And it's a team that's varied, that can help you in many different disciplines of life. But an accountant is one of the most important because hopefully you never have to use an attorney for something bad. maybe just for a land sale or something like that, or a house sale,
Right.
but not for civil or criminal. It's kind of like an insurance policy. We all buy insurance, but you hope you never use it.
Right. You don't necessarily have to have one of those.
So if you can make it through life without ever having to use an attorney for something to defend or to go after, that is a good life for the most part, I think. I think you still have to push limits. But anyway, that's a good. But an accountant, you have to have a good accountant. And an accountant that's trustworthy, that's knowledgeable, that's extremely intelligent, and those are you check all those boxes.
Oh, thank you.
And so you're a superstar to myself and to Heather.
Oh, thanks.
You really are. So, and I want to introduce you to people out there.
Well, it's clients like you that make my job worth it. You know, again, the job comes with a lot of stress, and we have very high standards. You know, mistakes for us are highlighted. You know what I mean? So we do everything that we can. Well, most of us, the ones who care, do everything they can, you know, to make sure that those don't happen. But we are human. And a lot of people think that, you know, we're good with numbers. But the big thing is our relationships with our clients. And that's why I love what I do so much, you know. That makes some of the other stuff, you know, dealing with the IRS, that's no fun for anyone. But we do have to do it. And dealing with these other agencies and stuff like that, you know, the client relationships is really what, you know, I'm passionate about.
Well, the IRS can be intimidating. It's a big
some.
apparatus, but not as much as in I remember in the 1970s. This is before you were around, but the IRS would strike the fear of God in people. They would seize your bank accounts, lock your doors, and I forget who it was that made the IRS a more friendly apparatus. I don't know if it was Reagan. It might have been Bush. I don't remember which administration did that, but everyone was thankful because, and it could be as much as a mistake on their end, and all at once your life is turned upside down. And so having someone like yourself that interacts with the IRS on a professional level is, boy, when you get that letter that you owe this or owe that,
yeah,
it's.
Well, we're dealing with a different IRS now, too, as far as, you know.
Cut. What happened? I lost feed. Well, I guess that's still the power of the IRS. The cameras went boom, boom, boom. They just shut down. So, hey, we're not talking bad about the IRS. I know we all need tax. We need a tax base for roads, police, fire, everything that we have. So, but we're going to get back on subject of people dealing with the IRS, and you're that intermediary that talks to them on a professional level. Mm-hmm. And it's so important because it can overwhelm people.
It can, yeah. I mean, obviously, it's a big, you know, people get stressed out just to get mail from the IRS. And the difference with, you know, today versus even when I first got into practice, those notices go out and they may not even be correct, but people automatically, you know, panic or freak out. So, you know, I typically do have to, it is very important to have someone who can help you with those, you know, anything that you have to deal with.
You were talking the other night about business trade. Or what was it again? It's a South Carolina. Let me back up first. Let's go somewhere first because people are moving to North and South Carolina.
Yes.
So we got to get there first.
Yeah.
When people are moving here, what goes on with their taxes? Let's say, of course, there's a million different scenarios you could have: businesses, retirees, pensions, all this stuff. But when they move to a new area or a new state, do you recommend that they have to file taxes in that state when they've moved there, but let's say their pensions are coming from somewhere else?
So
how does that work?
Let's just take somebody from Pennsylvania or any state outside of South Carolina. So if you move into another state, we'll say South Carolina because that's where we are, but what you have that first year is you're going to have a multi-state tax return. So you will file for both states part year resident, and you allocate the income based on, you know, the time. If you moved in May or towards the end of the year, you know, there would be an allocation between the states of that income. So the first thing to know if you're planning to move states is you will have to file in both. Unless you move to a state that doesn't have an income tax return. Florida, Texas, etc. But South Carolina, we do. So in South Carolina, that first year, you're going to file a non-resident or part-year resident return and allocate based on, the time that you were in each and the source of the income. So the biggest thing that we see when someone moves here, or one of the most, things that a lot of people run into is pensions that are not taxed in other states, New York, Pennsylvania. A lot of police officers with pensions, firefighters, things like that. They're not taxed in New York, New Jersey, some of those states up there. But when they move here, South Carolina does tax pension here. But what they do offer is a retirement deduction of up to $10,000 to reduce that pension income. So that's the biggest thing that we see. A lot of people get that sticker shock that first year when they have to pay South Carolina taxes on that pension.
Well, I think one of the things that when people move here, they're moving to an area that is more, it's easier to live here economically than New Jersey, New York. Their taxes are high, the property taxes, and one of the things that would offset would be the reduction in property tax.
Absolutely.
And it's nothing for people to have property tax on a standard home of $15,000, $20,000, $25,000 a year. They move here, and especially if you move in the city limits of Myrtle Beach and it's their primary residence with the A-tax help, you can have a $400,000 or $500,000 house for $2,500, $3,500 a year, not a month, a year in property tax. So that kind of makes up for some of the difference. And our state tax, does it go to 6.2 now?
It's 6.2 as of July of 2024. It was 6.4. So it just changed. So that's the max. So it goes from 0 to 6.4 based on your income. It's a marginal tax rate.
Now, we were talking the other night, this really intrigued me, when we were talking about the business trade.
Okay.
What business?
So another thing to know about South Carolina that is they have a flat tax. So where individual income is taxed at between 0 and 6.2%, if you have any business flowing through from S corporations or partnerships, and what I mean by flow through is they're not taxed at that entity level, but the individual receives a K-1 to pick up that income on their return. You report that on South Carolina, and you have the option of taking the active trade or business flat rate of 3%. So it's one thing, definitely to be aware of. It doesn't even have to be K-1 income. It can come through for a sole proprietor or LLC as well. So it's really good. I mean, it's great. It can save a lot of money. And I have seen where, CPAs who, let's say somebody's in Pennsylvania and they have a CPA up there. If they come here, and have a part year but are still using that CPA, we do see that missed a lot where they didn't take that election to for the flat tax of 3%. So, and even some CPAs here or accountants may not be aware of it. We see that often missed, and it's really a big savings.
And it's one of those. It's one of those line items that's not on the software based.
Right. The software, the software is really good about giving us diagnostics and things like that. But that is one thing that we can see. It doesn't give you a diagnostic for it. So if you're not aware of that, as a preparer or, a CPA accountant, whatever, then the software is not going to highlight that for you.
So when you're talking about a sole proprietorship, which can, as a DBA type in set up for a business, of course, you're exposing yourself a lot more to liability if you don't have a protection of a corporation or a partnership, limited liability corporation, limited liability corporation, right?
LLC.
See, yeah. Mm-hmm. And or S Corp, C Corp. Those are more for more established. There's many different reasons to have many different types of corporations. But as a DBA, you're exposing yourself and all your assets to liability because it is coming to you directly personally. There's no separation. There's no veil of protection.
That
through
is if you are just as a sole proprietor. Yeah. So as far as taxes go, it doesn't matter how the taxes are filed or how that doesn't pertain to the protection part. The LLC is designed for protection, and that's filed with the Secretary of State.
Now, do you see people setting up what they call, and I don't even know if this is a dirty term. I've never asked you because I don't do it. I know you don't do it, but I don't know if this is a dirty term. It's called a pass-through company. That's where people set up LLCs to pass money through to get to other corporations, to other LLCs. So if a pensioner is coming down here from New York or New Jersey, do they ever set up a pass-through company like a LLC to try to reduce their taxes? Is that something that people do? And is that legal?
I'm not sure I'm following.
Okay, so if you have a pension of $150,000 a year and you set up an LLC and the money that comes into your pension goes into your LLC and then comes back out, that's illegal, is it not, or is it?
That can't even be done because the pension, whatever pension income you have, is going to be reported on a separate form.
So it's taxed prior to getting there.
Correct.
Okay.
You wouldn't be able to do
So if you have an LLC, if you're coming from a different place, New Jersey, Pennsylvania, New York, Ohio, wherever you're coming from, and you have businesses, you're not a pensioner, but you've had businesses. They have LLCs, and let's say it's a remote business, much as you do all your work on a computer. You don't need to be in a certain location. There's no brick and mortar. Would you advise when someone moves to a new state and that's now their permanent residence to move that LLC, that S Corp, that C Corp into the new state they're in? Or is it desirable to leave it where it's at?
If you're not actually doing business in that state, I would, advise that you shut that down. Otherwise, you're going to be filing 2 state tax returns and still allocating the income to South Carolina because it's not even being generated in that state. So you can close it down in the state that you came from and reopen it here.
What are some of the things that people can do when let's take California, for instance, and I know you do a lot of tax preparation in California.
Yes.
Yeah, don't you love it?
Yeah.
It's its own country.
Wow. It's just a whole different world out there. Yeah.
It's its own country.
Yes.
And they kind of are one of the, if not the only, one of the few states that fall outside federal jurisdiction for certain tax laws.
So South Carolina only has they follow federal on almost everything. There's only a few modifications that we have to make on it for South Carolina taxes versus federal. California, they just have generated their own set of, tax code out there. There are a lot of adjustments to be made out there on those returns. Yeah.
When you are doing taxes for someone, when you're preparing taxes for someone in California versus other places in the United States, is it a drastic difference? Is it a small difference in the tax code? I know there's a lot of variables inside that. If you're a pensioner, it's not going to be near as great as if you have 3 rentals, a business.
Right. So most of the tax returns that the clients that I deal with and the tax returns that I do out in California have all of that going on. So their situation, just across the board, they just have so much going on as far as sources of income. Mm-hmm. So the tax return is already going to be pretty involved. And then you throw in California and it really changes. You have to spend a lot more time going from the federal return to the California and coming back and making adjustments on this state return out there than you do here.
Yeah, California has a lot of special codes, especially in the movie business, the film business. But they also have a California Corporation Board, and one of the headquarters is in Chicago. So if you start a corporation in California, let's say like Taco Bell was started there, all the Taco Bells around the United States still have to, even if you're in Chicago, Ohio, whatever, you still have to pay California corporate tax.
Of course.
And so it's a very unique system, and that's one of the reasons they were able to generate so much wealth as they were developed. It's amazing how it was set up back in the day. California, it became its own nation in our nation.
Yeah.
And Texas is a little bit that way too. But when you're filing taxes, or when you're not filing, when you're preparing taxes for the people, and I think we've had this discussion, and I'm from out west originally, and I've always told you there's just a difference.
There is a difference.
And it's a much, how do I put this? A much different mindset in
from what I've
the ability
seen,
to go ahead. I don't want to say too much, but it's a much different mindset in business, in life, in the way it operates. Do you find that? Because you're at the blunt end where you see everything. Your accountant knows everything about your life.
Yeah.
We had a movie about that in the film festival, but they know everything about your life. So you really are digging deep. I don't know if you do this, but like psychologically, when you look, you can kind of figure out someone's life through their taxes.
Absolutely. And that's another thing, when we were talking about, client relationships and stuff like that, it is because we are there for all those major things, anything that is a big transition for people, they do need their accountant for a lot of those things, whether it be getting married, getting divorced, losing a family member, starting a business, selling a business, all of those things. But yeah, that's the thing. It's not just preparing taxes and good with numbers. My software handles the majority of the numbers, right. Actual simple math or whatever. But it is the story that is told on those, and, yeah.
I think there's a net migration out of California for the people who've lived there for a long time. I'm not talking about people coming into the United States right now. Migration out. I think of all the states, they have the most difficulty adjusting to the other states because they grew up in an area that truly is its own little country. It's not a little country. It's the fifth largest. It's the fifth largest economy in the world by itself. I don't know if you knew that. If you separated California from the United States, and California is its own country, it's the fifth largest economy in the world. That's how big it is. But when they move, they have a hard time adjusting to a new region. And so we have a lot of people from California moving here. And I think that's a big asset that you have, is that you're preparing taxes for people from California. So as they're moving here and they're like, I need someone who understands where I'm moving from because I have to make this transition out and into a new state. Mm-hmm. That to me would make you extremely valuable because you have knowledge there and here and knowledge in other places because you do tax preparation for other places also.
Correct. So yeah, I've been fortunate enough, so I've never been to California. The farthest out west I've been is Las Vegas. So I haven't been there, but I was fortunate enough to, find a CPA firm out there, and the guy who owns it has just been incredible. So I do, contract work for them, and that's where this work comes from. And I have done, I can do tax returns in all of the states that have them. And I have, but so I've spent a lot of time doing the California returns because of that connection. But yeah, it's just a big difference on the tax return, just in the complexity and getting to know him and the people in the office and the clients. There is a different mindset. It's very interesting. And I don't have a word for what that is, or why they are. Obviously, I don't know why, but
extreme multitaskers.
Yes.
And able to operate on different levels.
Only the ones that I have dealt with seem very not easily disturbed.
Right.
And again, that could just be, the clients that I'm dealing with because they're under him and they are, pretty high net worth.
Oh, yes. When and they're able to move somewhere. An average person in California can move somewhere and be wealthy in other places. As long as they're not moving to Manhattan or something like that, or downtown Miami, they can be wealthy because they can sell a standard ranch-style home for $2, $3, $4, $5 million. Plus, they've acquired some savings. Plus of this, and if they've had another investment property or whatever, they're coming to another state with $5, $10, $20 million.
Yeah, and
they're coming into a place where you can buy a nice home for $500,000, for $1 million, for $2 million, you get beachfront.
Yeah,
and it's unheard of to them. I think the biggest obstacle they have beyond taxes is the humidity. So if you've ever been to California, if you ever do get the chance, I remember the first time that Heather went out. It was quite a while ago, but within 2 days she said, "We're selling everything and moving here." It's like a drug. California is a drug, and especially when you get into the right area. My favorite's Santa Barbara. It's 75 every day, 55 every night. And 40% humidity. It's perfect. It's utopia to me. And when we got there, she's like looking on her phone, like, we're selling everything. We're just moving here. I don't care what it takes. We're moving here. And it's like a drug, and it's hard for them, and they leave, and they get away from it's politically right now, it's really messed up. So the people escape that, and then they start having these feelings. It's like you've left something that you can't duplicate anywhere in the world. And California is, so I would recommend anybody to go to California and see what it's about, see why that calmness exists, see why this business mind exists. Anyway, back to taxes, because I can go down a hole with that one about people migrating that way.
Well, so back to just to give you an idea of the difference between, and you already know this is what we've been talking about, but California versus South Carolina too, filing tax returns here on the federal side is, when the major tax changes happened a few years ago, a lot of people, don't itemize here. A lot of times we see the standard deduction because you have the itemized deduction versus the standard deduction. And the standard deduction here typically is more beneficial because for the itemized deductions, if your property taxes aren't very high and mortgage interest, things of that, you're also limited, to $10,000 here on your state taxes now. But between the mortgage interest and stuff like that, the standard comes out better here. But almost every single tax return I do out there is itemized. I mean, you're talking about, mortgage interest average, what I see out there is $40,000, $50,000 a year on interest.
Right.
Property taxes, same thing. I mean, it's nothing to see property taxes for $30,000 out there. I wonder how anybody who doesn't make $500,000 is living, honestly.
With people who when I say the average folk, someone who's working in a grocery store, a checkout person, someone cooking at a restaurant, someone roofing, changing the brakes, and a mechanic, not owning the shop, but the person working there, they make a premium compared to what's made here, but nothing compared to what it costs to live.
Right.
So they may make a 10% premium on their wage, but their living expenses are 300 to 400% more. When we were out there, we used to, prior to COVID, we used to go quite a bit for business, for film. And I always thought it would be a good documentary to do of how the average person, when I say the average person, well, in California, the average person will make a couple $100,000 a year, but the average person who works those average jobs, how are they doing it? Because the rents, the utilities, gasoline in downtown Los Angeles is almost $7 a gallon. Here it's $3.20.
Right.
So how are these people doing it? And then there is a thing where you have a luxury tax. And when living's so good, you'll pay a little more. But then there gets to be a point to where it's a tipping point to where no matter how good it is, you can't afford it. And I wonder how these people are hanging on. Do they live? Do they all share an apartment? Do 4 people share an apartment and they sleep in shifts? I don't know, but it would be an interesting documentary. If anyone out there wants to make this, please submit to the Myrtle Beach International Film Festival because that'd be a great documentary. But it's how much people are willing to put up with for the beauty, the weather, and all the amenities that California has to offer. But at a certain point, and you're seeing that point has tipped now because that's why the net migration out of the people who've been there for a long time. But when they come to a place like South Carolina, it's a lot more detailed than just selling your assets in California, transferring them to South Carolina or North Carolina, wherever they're coming. It takes someone at your level to help that transition smoothly so that they don't find themselves in the clutches of violating tax code.
Right. Yeah, because when you get to allocating multi-state tax returns, it can be very tricky. That's not something I would recommend anyone trying to do on their own. A lot of times I see clients coming to me after they've tried to do something like that through TurboTax or one of these other, user-friendly, you can do your own taxes, system. And we have to go in there and fix it because when you get to that point, TurboTax is no longer your friend.
I've got a good question. It's still on tax topic, but just it's different. What makes your job, back up. What does an accountant like to see from a client, such as myself who has multiple businesses, bringing in? Do they like Excel? Do they like QuickBooks? Do you like, I know you don't like paper, but anymore, no one does, but how do you prefer the data, the numbers turned over to you? QuickBooks, Excel, how?
I don't care. To me, it doesn't matter. Excel, QuickBooks, whatever works best for the client, whatever they know how to use if they are doing it themselves, so that it is more accurate. Because a lot of times we have clients who use QuickBooks and they've, used it for years or whatever. And we get the books and they say, oh yeah, we've entered everything looks great. And we look at QuickBooks because QuickBooks is another, Intuit program like TurboTax that says you can do this yourself. So user friendly. But, someone coming in and trying to do their QuickBooks themselves, and then it comes to us and it's a pretty big mess because they don't know about the balance sheet versus the profit and loss. Their accounts aren't set up correctly. So then we have to go back in and, sometimes we can go in there and easily just correct their books. Sometimes we have to start from scratch. So it doesn't matter to me how the information comes in. If you are actually keeping it up with, by yourself, then just, use what works best for you to where the information is correct. Otherwise, I'm going to be doing it again.
In the movies, you always have, in a movie scene, you'll have this one character who comes into the accountant on, most business people file for extensions, but let's say the standard April 15th, they come into the accountant on April 13th with a shoebox full of receipts and says, here's my year.
Yeah.
Do any of those people still exist? Does that still happen?
Those people 100% exist, but we no longer, we just don't get that. That's not going out on time.
Right.
Most accountants are really busy as it is. And if something comes in April, typically, and again, it depends on the firm and how busy they are, but a lot of times, at least 2 weeks out, they'll say, if you don't have your information in by April 1st, you're not going out by then. But then too, if you still bring in stuff that's really not even ready to go to the return, it's not going out on time. But yes, we see them all the time. I had one come in recently.
Are any younger people, or is it still the older generation who still did things with receipts?
This was a younger one.
Really?
Yeah.
That shocks me. I would think it would be an older person, like in their 70s or 80s.
Oh, you're talking about like actual receipts?
Yeah, I'm talking about like where they bought. You run a small business.
That's still the older people. No,
Yeah.
I got brought 2 years of bank statements.
Yeah.
Just in paper. Here's 2 years of bank statements, and it was personal and business mixed. So I gave it back to the client and said, you have to tell me what's business and what's personal. So
you still get it back. So do it right to begin with, right? That's your advice.
Right. Yes.
And when you're talking about the tax code is so, what is it, like this thick?
Yeah, I want to say.
Just for the IRS.
I think it's like I don't even know how many pages.
Over 1,000 pages.
No, it's over 20. I mean, it's well over 20.
20,000?
Correct.
Okay. So when you have different classifications of accountants, as far as like I think we were talking the other night about nonprofits. So to do an audit on nonprofits, you have to be certified as at different levels of accounting, or
that doesn't have anything to do with tax. That's audit, like financial statement audits.
Okay, so not every CPA can do a financial statement audit for a nonprofit.
No.
Is it a certification program? How does one acquire that, or how do you become
You don't
that?
have to. It's not a certification, but the not-for-profit audits do. They are different. I mean, you have to definitely read up on those because their financial statements are presented differently from a for-profit entity. So the audits look a little bit different. And typically the reason that they have to do these audits is not related to the IRS or tax, anything like that. A lot of times they are getting money from government funding. They're getting government funding and or United Way, they require them to have them a lot too. If they're getting funding, a lot of the grantors will require them to have an audit, just making sure that there's no issues with their financial statements and the money's going where it's supposed to go.
So when you say United Way, that's United Way as we know United Way, and how does that fold into the equation of a broad scheme when you're talking at that level? So do they fund people, or
they do fund some of the nonprofits. Now, prior to COVID, they were funding quite a bit more. They've reduced their funding, but they do, fund certain not-for-profit. That term has changed. It used to be nonprofit. Now, in the auditing and accounting world, it is not-for-profit.
Okay.
So that's why you'll hear me
Okay.
even correcting myself, because this is something relatively new too. But yes, so they used to contribute money to, especially in South Carolina, the local nonprofit, not-for-profit organizations. And at one point, if the not-for-profit had gross receipts of over $50,000, then they were required to have a financial statement audit in order to receive the funds from them.
Is it still?
They've really reduced since COVID. Their funding has, been significantly reduced.
Do you see an increase in NGOs with not-for-profits, the non-government organizations?
No.
Where the government money, there's more government money flowing into NGOs, which non-government organizations, nonprofits, not-for-profit, 501c3s. On the government's balance sheet, there's a heavy increase in that.
Mm-hmm. Not where we are in Myrtle Beach, not with what I deal with.
Okay.
Because mine are, much smaller organizations. I don't deal with any really big not-for-profits.
Jump over to Social Security, one of the things we were discussing, and I think you said prior to when we sat down, there's a gap of, I know it was 62 to 65, but you said it's changed.
Yes.
And explain that in layman's terms, what that gap is about you have a limit of what you can make before they start taking away benefits.
Okay. So there's quite a bit of confusion on mixing two different pieces of information. So at 62, so we'll just start. 62, you can start drawing Social Security. It used to be 65 that was considered full retirement age, FRA. In 2022, that was adjusted to 67 years old. So at 62, you can start drawing your Social Security, but you are looking at up to a 30% reduction from your full benefit amount if you start drawing it early. 67, you would get the full 100% of your benefits. Age 70, which some people do hold off until then, between 67 and 70, each year you wait, there's an additional credit added to that. So if you wait until 70, currently you could get up to like 124% of your benefits. So people hear the age as far as benefits received and get a little bit confused, thinking that 67 or 70 is when your Social Security is not taxable. That's not true. There's no age for that. Your Social Security, if it is under $25,000 for single, $32,000 for married filing joint, then it's not taxable. If you get between $25,000 and $32,000 for single, or $32,000 and $34,000 and $44,000 for married filing joint, 50% of your Social Security is taxable. And then if you get above those numbers, it's 85%. It's a tiered system for how your Social Security benefits are taxed. Any age, even over 70, that's still on that tiered system.
There's also a gap in the years where you're only allowed to make so much, and then the benefits get reduced. And then after you go past a certain age, that ends.
So if you start at 62, they will reduce it if you have any additional income once you get to the 67.
Okay, so do you know what the number is at where they start to reduce? And they actually, it's not that you get taxed on, you don't get the benefit, correct? Is that how it works? In other words, let's say you got $1,000 or $1,200 a month, $1,500 a month from Social Security. You retire at 62, but you made $150,000 a year. You're not going to get that $1,500.
No, you're not.
You're going to get a reduced portion, not even tax. It's just reduced. They don't.
Right.
And that's from 62 to, it was 65. Is it still 65?
67.
67. But if you wait till you're 67, that doesn't come into play. They're not going to get their 5 years no matter what.
They're not going to reduce your benefits because you're considered full retirement age. So they won't reduce your benefits. But if you are, getting that $150,000, then you can guarantee that 85% of your Social Security is going to be taxed.
Okay. Or what about when they reduce the benefit? I don't know if I'm making myself. In other words, if you're able to get $1,500 a month at age 62, whatever, it's just a hypothetical number, and you made like $500,000 a year, you don't get that $1,500. No. And I'm not even talking about taxing. They just will not. It's not taxed. It's reduced.
Correct. But I don't know what those numbers
are. But it can be greatly reduced from what I hear from seniors that I've talked to. They're like, I got to get rid of my income. Because if I've got to quit working, I've got to quit doing something, and of course there's a tax or there's a monetary calculation there. It's like, well, if you're making $500,000, who cares about the $1,000 you're missing? Keep making the $500,000.
Well, the thing is they should have somebody advising them, or not should, but hopefully they would have somebody advising them. If you're still making that kind of money, that would be the situation to where you should not start drawing that early.
Right.
You don't need it. So, I do understand a lot of people, actually my dad included. My dad is retiring this year at 62, and he realizes he's going to get, reduced Social Security or whatever. It won't be the full retirement age. He's just done. He's fine with it. But if you have somebody who is making, a good amount of money, I don't know why they would consider reducing their benefits by the 30% just by not being full retirement age, and then reducing it even further because their income is higher. They should just hold out until full retirement age.
Now, is that something that an accountant does? I know certified financial
planners. Depends on your accountant.
Okay, but they're licensed to do that, or they're legally they're able to do that. It's like I know accountants aren't allowed to give legal advice, and lawyers aren't allowed to give accounting advice.
Absolutely
advice,
not.
And that's a big no-no, right?
Big no-no.
Legally, through the LLR.
I had to tell a client that today. Like, I cannot even go there.
Can you advise people on reducing tax liability?
Absolutely. That's
can.
Exactly what that. So there's a difference between just preparing the tax returns, getting them prepared and sending the client on their way, versus actually looking at their situation and planning throughout the year, if you have that client for a full year or more than 1 year. So yeah, like tax planning and tax strategies, if you do have that relationship with your accountant, they should be providing that advice for you too.
So a lot of
Now, I don't do financial advising. I'm not going to tell you where to invest your money. Right. As far as stocks or anything like that. That is a financial advisor all the way. But a lot of times, the CPA or the tax, the accountant should be involved on helping you with those tax strategies, going a little bit above and beyond just preparing the tax returns.
So you would advise people when they're moving here and they've sold their place in California for a couple million, or in New York or whatever, they're moving here and they have some assets, to communicate with a CPA to help mitigate tax liability. Would that be correct? And is that possible?
It depends. Okay. So that completely depends on the situation, what those assets are, what type of businesses they have. It really just depends on the circumstances as to what can be done. A lot of times when you see, tax planning strategies, they involve businesses. There's a lot more. If you have just W-2 income, there's not a lot we can do. It's just going to be, or pension income that's going to be reported on a 1099. Items like that, there's not really much tax planning that can be done, except for the Social Security. And again, that's going to be based on a couple different things: how much money you're making, your need, whatever the case may be. So the person really has to have their own idea, their goals, but we can tell them what that's going to look like. But as far as assets, like, I wouldn't tell someone, again, where to put their money as far as investments, stocks, anything like that. I don't mess with that, but we do try to do some tax planning and, whatever we can do to reduce their tax liabilities.
There's a lot of people, I hate to use the word side hustle. I hate that word. It's side jobs. It's business.
It's a popular word, though.
It may be popular, but it's business. It's not a hustle. Hustle to me is always like a scheme. It's like you're trying to hustle someone, because back in the day, hustling someone means you're screwing them over. So I hate to use that term, but I understand hustle can also mean hustling, like working extra hours. Yeah. So it could be both ways. But being what it is, a lot of people are selling online now. And they'll go to a Goodwill, they'll pick up some clothes, they'll sell it online. Mm-hmm. They have a small business. And it's just maybe something to, I have seen people who have made big businesses out of it, but I've also seen people supplement their income with this. Mm-hmm. It's become a trend. A lot of people do it. I wouldn't say the tax code changed. The 1099 status changed. eBay, anything over $600, Facebook Marketplace, anything over $600, there's a 1099 issued now for any sales over $600 connected to your person when you set up your account. First of all, for people who don't understand, who haven't been into contracting business or hasn't worked for themselves, when they hear this term 1099, what is a 1099?
So a 1099 is issued to independent contractors. So instead of employees. So it's money that has been paid to you for either product or services or products or services or whatever, like for sales, I guess I should say. And so that's letting the IRS know that you've received this income, and it should be reported on your return. What happens with the 1099 is no taxes are withheld on that. So it's up to the individual, maybe to do some tax planning if they're really starting to make money, or if they already have the business set up, they'll have other expenses to account for as well. But the difference between getting a 1099 versus a W-2 is you are not an employee. So you're going to be responsible for Social Security and Medicare tax on that income.
There's no taxes withheld. Mm-mm. And they've really honed down in the last about 10 or 20 years on the payer side and the recipient side to make sure that everybody's filing 1099s, because you get in big trouble without it.
They're really trying. They are trying.
It helps, and it helps at the end of the year to get the 1099 to, especially if you're running, I don't know if you got a landscaping business, whatever, but then that's the individual that they're dealing with people, the average individual, like if you have a landscaping company and you go and you cut their grass or whatever, and it's the bill at the end, you've charged them over the year $2,000. Anything over $600 to the individual has to be, anything over $600 and coming in your business has to be declared. Has to be. It should be declared underneath that, but it has to be declared over the top of that. But the average individual is not going to give that landscaping company a 1099 because they're not another business entity.
Correct. The individual doesn't have to issue.
Right. And so that landscaper will not end up with a bunch of 1099s unless they're doing it for another business.
So the IRS has really tried to do this matching thing, seeing what's reported on these, business returns as far as income, and they're trying to get some sort of way to match it up. But those are the things that they don't, that is still being missed, is that, there's still going to be some element to it that's not reported on a 1099.
So
when you don't have to issue them to LLCs that are taxed as S corporations either.
You don't have to.
Mm-mm. Or corporations.
Because they're supposed to have their own records that show where they've received the payment for the work done and all.
Correct.
Okay. What we're going back to the online sales that a lot of people were partaking in, they got shocked when they got hit with a tax bill or they got hit with a 1099 from eBay or whatever they're selling on. They sold a couple $1,000s worth of goods. Maybe it was stuff hanging in their closet that they've purchased and then they just don't wear it. It's just, they're just trying, kind of like a glorified garage sale online, right? But they're getting rid of things that they never wore. How does that work when someone has paid retail and then they're selling it for a fraction, but they get a 1099? They would have to to maintain those receipts, would they not?
Or not necessarily the actual receipts, but if they do have, some proof even running through the bank statements of when they purchased those, which if they are selling something that's older, they might have to go with a different idea. But I mean, they should be able to still substantiate some expense for what they sold.
Does the IRS give a little bit of leeway with that when you're dealing with older items, let's say antiques or items that are older that have higher value?
I don't know it depends on who you're dealing with the IRS.
Okay. So how would you calculate that?
With antiques?
When you have your cost basis, the cost basis for what you are selling. Let's say you bought something 30 years ago, a piece of art, whatever, a sculpture. You bought it for $1,000. You sell it for $2,000. And so you have $1,000 gain, realized gain. But you have a basis of $1,000, but you have no receipt for this thing. How would you avoid something? How do you even do something like that online? Because there's a lot of people getting hit with this.
Mm-hmm. I mean, you should probably consider that before selling it. You know, the IRS, if you were to come under audit, they're going to want some sort of documentation, you know, for that. I mean, and with something as unique as antiques or whatever that you can't really go back and have an argument for, you know, I don't know what their guideline would be for. I think they would give you something as far as, you know, a cost basis, but if you actually don't have proof of anything, who knows what that would be.
I'm not a financial advisor, and I'm a disclaimer, but I always tell people just pay the full price. If you've sold something, you bought it for $1,000, but you can't prove it, just pay the tax on the full price. Pay that as you've profited for $2,000 and eliminate the problems.
Yeah, and it's not worth the risk.
It's not worth it.
Yeah.
It's not worth it.
And that's what I would say as well. I mean, obviously, you know, think about, do you want to sleep at night or worry about this? You know?
So a lot of people are selling online, and so really, do you think it's best if they're going to have an online store that they maybe form an LLC or
the LLC is just for protection. Mm-hmm. So as far as tax purposes, sole proprietor LLC is going to be filed the same way on the individual's return.
And that's through a Schedule C.
Correct. So either way, if you have the LLC set up or if you're just a sole proprietor, you would file a Schedule C. So you're going to be taxed the same way on that. The next step would be, you know, if they're making substantial income and you want to consider electing to be treated as an S corporation, then, you know, there are other ways. Then that has its own separate return, and there are other tax strategies that can be done there. But as far as LLC versus, you know, sole proprietor is the same.
As long as they're not selling something that's like electronics or something that could burn someone's house down, something like that.
Right. They may not need that protection.
Right. Now, with an the difference between the S Corp, C Corp, and an LLC when it comes to, well, for one, what you're talking about with profits. In an S Corp, you can elect to have some of your profits be dividends, which in an LLC you cannot. Is that how?
No. So what happens with an S corporation is you have shareholders. So even if it's just a single shareholder, one person, you know, that's a part of that company, you have to have a reasonable salary. So, and that is determined by whatever the person is doing. So with an S corporation, the shareholder is considered an employee, is going to receive a W-2. That amount is going to have the Social Security and Medicare tax on it. But that may not be all the income that the company makes for the year. So let's say the company makes $100,000. Okay. So that's the total net income. And then the shareholder's salary is $50,000. Well, Social Security and Medicare are going to be, you know, that is going to have to be paid on that $50,000, but not on the full $100,000. So that's where you see a tax savings. Whereas if you have an LLC or a sole proprietorship, all of the income that you make is going to be subject to self-employment tax. So that's where you can kind of see. But the big thing with the S Corp is not everyone needs to be one. I've seen, you know, some accountants or whatever, they think they're doing their clients a favor by setting up S corporations for them and then not having a reasonable salary or any salary at all. And that's a major red flag for the IRS. It really is. S corporations need to have shareholders with salaries on them, unless they're actually just not doing anything, you know, as far as actively involved, or if the business is going through some years where it's not making money, then it's okay. Dividends are for C corporations. Now, a shareholder can take distributions from the S corporation. Those are not taxable as long as they have basis. And I mean, that gets really tricky. So I don't want to go too far into how that's calculated or anything like that. That's a whole, you know, series. But the S corporation, they can take distributions, and those aren't subject to any tax as long as they're
not subject to federal tax or state tax.
Because you're already paying, regardless of if you take the distributions, you're paying on that net income the same. So let's say one year you make $100,000. You don't take any distributions. So your net income, you've paid on that. The following year, you make $100,000 and you take $50,000 out. Well, the $100,000, you are still going to be responsible for tax-wise. The $50,000 you can take out and you're not taxed on it.
Okay. The difference between SC and LLC also with an automobile. An LLC is mileage, correct? Or can you do elect to do mileage or cost?
Mileage or standard
actual
or actual.
But with a S corp, it's actual. There's no mileage.
Not for the shareholder. No, they can do reimbursements to employees for mileage, but for the shareholder, no.
Right. And mileage right now is what? 60
it's like 65 and
65 cents a mile. Mm-hmm. That adds up, especially when you've driven 200,000 miles over a 4 or 5 year period.
Well, and that's the thing. I do look at both ways, excuse me, and see which one's more advantageous. But let's say you get a car, let's say you buy a car this year. You have to take standard the first year in order to be able to go back and forth.
When you say standard, what do you mean by standard?
Mileage.
Mileage, okay.
Yeah, in order to be able, you can actually toggle back from year to year if you take standard the first year.
But if you take mileage, you cannot depreciate the vehicle? Or can you?
You can in another year. You can't do both in the same year.
You do one or the other?
Mm-hmm.
Okay. So if you're not driving too many miles, it'd be better to take the deduction.
The actual.
Mm-hmm.
And then you get your depreciation.
And then if you're driving a lot of miles, of course, it's better to...
Yeah. And a lot of times we see that, realtors, construction, any kind of contract work, we see a lot of where the mileage is really beneficial for them too.
This isn't a plug for Toyota, but I guess that's why most of the millionaires drive Toyota Camrys.
You have said that before.
I have, and I'm a firm believer. You can drive those cars for as long as you maintenance them well. 250,000 miles, you take it 65 cents a mile. At 200,000, that'd be $180,000. You'll probably spend somewhere around $15,000 in fuel. That's a lot of money coming back. So a Toyota Camry can actually make you money back by buying it and maintaining it well and keeping it for 15 to 20 years. But I know that that's a statistic that the automobile that's the most driven automobile by millionaires in the United States is a Toyota Camry.
I think this is a plug for Toyota Camry.
Well, they can always just send one my way. In fact, Heather just bought one.
I'm aware of that.
And I was a big pusher of that. You know that. I'm always pushing those cars off. It's like, get a Toyota Camry.
I know.
It'll last forever.
I'm pretty sure you're not going to let me.
I'm not going to let you leave until I put a wrist stamp on you. And I don't have one. I've got a Chevy Silverado truck, which I'm happy with. But they are great cars.
Yeah.
But a lot of that falls into, that gets into the financial planning aspect of life, of what you drive for your income, and that's a segment all into its own.
I don't get into all that. Yeah,
but it's an important. One of the things when I was talking to interviewed Robert Kiyosaki, talking about they don't teach money. Schools don't teach about money.
So that's the thing, Jerry. I don't understand why we still have Algebra 2. And these kids come out of here not knowing anything about finance whatsoever. They don't know how to balance. I know online banking pretty much does it for you, but come on. They don't know what they're looking at there. They have no idea about, filing tax returns. Mm-hmm. Like, I don't expect you to be able to prepare your own tax return coming out of high school, although I did.
Well, you would.
I did mine on paper too back then,
Yeah.
We didn't even have TurboTax. I had to do mine on the form.
You're a numbers junkie, though, so you love it.
My mom thought I was absolutely out of my mind. I was 17 years old doing my own tax return on paper. She was like, "What are you doing? We have an accountant." I was like, I got this. Yeah. But they don't even know about filing tax returns, But yet we have all these other classes in there that is not useful information, really. And
no, it's not. And Algebra 2, I can tell you this for a fact. Good luck that they really know Algebra 2. They know a surface of it. The people who are high-level math, the real high-level math people, the engineers.
Yeah.
Good luck that the 14-year-old, 15-year-old really understands algebra 2. And there are some out there that does.
And I'm not,
but why learn algebra 2 when you can't balance a checkbook?
It makes no sense to me.
You've destroyed someone that's going to have a hard time in life because balancing a checkbook is more important than learning algebra 2.
Yeah, some basic, like money lessons.
We had classes back in the day called home economics. We had classes called shop class. I had
that too.
Yes. I had all the shop guys do home economics. You know why? Because we got to cook food. Mm-hmm. So we could go, instead of, and our lunch was good because it was these older ladies. So when I was in school in high school in the early 80s, the people cooking the lunches were from like the 1900s, 1910. I went to high school in Ohio. And so you had these old German women that were farmers' wives, and man, did they cook good food. I'd always lean down under when I was going in, that was in our high school sit next to the grade school. And the cafeteria was in the grade school and under the basement. And when I was leaning in, I'd say, "Hey, what's for lunch? What are you guys making?" And and by being nice to them, they always gave me an extra square of peach cobbler or something like that.
So you knew what you were doing.
I knew what I was doing. It was a scheme, to get more food. But it actually was really good food. They were making it from scratch. But home economics used to teach. It was traditionally a girls' thing, and shop class was a boys' thing. But I got some of the girls to go into shop class. It's important to learn to change your oil, to understand how an engine works, to understand how electricity works in a house. Can you rewire a little receptacle instead of paying an electrician $110 to come in and do it? And just knowing if it's been done right. But home economics taught budgeting for a household. It's something that's not even taught anymore.
No, it's
and
not.
When you think of life, health is the biggest. If you don't have your health, it don't matter. They take your sickest day ever. I always say like stomach virus. You can put a pallet with $1 trillion worth of gold on it. It doesn't matter. You're so sick. You can't get out of the bathroom. You can't move from the bed. It doesn't matter. Money doesn't matter. After that, though, when you're feeling good, money matters. Having enough resources to cover your day so you're not stressed to the limits, making yourself sick.
Well, that's the thing.
Matters. And they don't teach a damn thing about it.
No.
They teach you to, a lot of it's get a fake education, get a job, get to work, pay your taxes, and shut up. And don't learn anything else. Financial freedom is a form of freedom, just like health freedom and political freedom. It's that important. I once had a friend who was a professor of economics at USC, and we'd talk a lot, and he said something really important one day. His wife was a doctor, and we were talking about finances, medical, and all this, finances and your health. And he said your financial health is just as important as your physical health. And you think if you have your stuff together in life, and you're financially secure, your stress drops to the floor if you're of sound mind and you don't go off the rails.
It's so true.
I've always wanted to do a documentary, and I've got doctors lined up about the number one health concern in the United States. Well, it's heart disease, cancer. No, it's not. Well, yes, it is. That's second tier. First tier is stress. Stress causes those hormones to fire off, which causes cancer, which causes heart disease, which causes these problems. Not saying every time, but the vast majority. Stress is a huge problem. Where does that stress come from in most people's lives? Lack of finance.
Yeah.
Oh my God, I can't pay my bills. Now, granted, some people don't, and it goes back to not understanding how to manage yourself. The first thing you do when I hear people here in South Carolina where we live, a nurse and a cop and a fireman, these trades, right? They get together, they marry, they have an income of $120,000 to $160,000. They're living in an area where you buy a home for $300,000. 5 years down the road, you run across them, you knew them. Oh my God, I just wish I made more money. Well, you're making plenty of money. You're just not managing it properly.
Correct.
Yeah, but I just don't, we were broke. Yeah, because the first thing you did was go buy a house for $350,000, 2 new cars, a boat, a vacation. Now you're in debt to where you can never crawl out.
Well, that's another thing that's not discussed at all, our credit cards and debt and all of that, and these.
Delayed gratification. Delayed gratification is the key success to having a decent life down the road. And there's always things that can happen. You can end up with cancer. You can end up with heart disease.
Sure.
These things happen. But nations can dissolve. We can go through national crises, which we're verging on. But these things can happen, but that's outside your control. What's inside your control is how you handle your finances. You don't have to make a lot of money to be rich.
You just have to know how to live within your means.
Right.
Yeah.
And if you do that and you get it under, to me, I was always the outcast when I was like 18, 19. I went into bodybuilding, which you're doing now. You look great, by the way. I want to get into that, how that's changed your life, you're working out, dedication.
It's to control that stress so I don't have health problems.
Right. But there's a benefit to it. But I was into work, a competitive bodybuilder, wanted to be in business for myself. My friends are, I just go party. No, I've got plans. I got to get this under my belt. To me, one of your most important periods of your life to get financially secure is your 20s. And you hear all these people, well, you can screw up in your 20s. You can, but it's you can also get your stuff together, your shit together, get this under control, pull back on the gratification right now, get these things in order, and by the time you're in your 30s, it's starting to flow. Now you can own a home outright, no mortgage, because you didn't go party, you didn't go this, you didn't go that. You started small and kept saving. Two people together, they can have financial freedom almost with any job, depending. Not in Santa Barbara, of course, not in Manhattan, but in the average places in the United States. This is not taught whatsoever. And
it's not. And you know what is picked up is, social media with all of these influencers who have, money coming from trust or whatever the case may be, wherever their money is coming from, flaunting all of this stuff. These young people are seeing all of these people take these fabulous vacations and, I just saw one yesterday that had a garage full of,
supercars.
Yes. And this is a young girl, so you have these kids seeing that, and these people seem so happy on social media. So obviously that's what it's going to take for me to be happy. But no, you don't see what's on the other side of that. But that's what our kids are seeing.
That is an episode that's probably 3 hours long that I can guarantee you, I've been in media for over 2 decades. What you see online that's very popular is not what you think it is.
No.
Reality shows.
We see highlight reels. We see what.
Right. What reality shows are scripted content. It's not reality. It's scripted. Someone shows up to your door and everybody's wired up. That should be the first clue. So everybody has sound attached to them, but it's just a chance meeting. No, it's set up. It's scripted, but it's scripted for entertainment purposes. But the problem is people blurred this line of reality and entertainment. It's fun to watch. So, the guy's got 2 Ferraris. Does he really?
Right.
Are they leased from somewhere? Is the company giving him those Ferraris so that's the carrot that's dangling out in front of your nose to keep you on that grindstone or whatever, or selling whatever? I know people who do nothing but sell how to get rich, but they never actually had a business. That is their business, is selling you a dream that doesn't exist.
Yeah.
And so many people fall for it.
That's what these young kids see, and we seem to be pushing that and highlighting this more, and then completely not teaching these kids what it takes to be financially, set,
stable.
Yes, comfortable,
where you don't have.
And
to
that
worry.
money is a tool. Money is not going to make you happy. The freedom that it provides, and the rest in knowing that you can pay what you need to.
And I think that what you mentioned right there, and you heard me when we first met. It's over a decade ago, wasn't it? Yes.
2013. Yes, it's 2024.
Okay, so a decade ago, a little over. We talked a little bit, and you actually were working for an accountant that I was utilizing, then switched to you.
Yeah.
And couldn't be happier. I tell you that right now. And if anyone has the ability to even get through to you, to have you become their CPA, that would be a big gift. Aww. To have you as their CPA. I mean that. I'll put my stamp on that.
Thank you, Jerry.
Name. But I told you at that time, money to me is a complete tool. I don't mean a tool like when you call someone a tool.
Yeah.
Like a tool, like a backhoe.
Yeah.
You can do a lot of destruction with it. You can do a lot of good with it. It's all in how it's used, but it's not used to ingratiate yourself into the hedonistic lifestyle so far that you destroy yourself and others around you. It is a tool. It's not to be used to have power over somebody else. And I think in a lot of, I don't want to get into religious stuff, but in a lot of all the different religions from around the world, most all of them, they talk about not use, money is the root of all evil. It's the desire to have it at all cost. Mm-hmm. Money is a great thing. It can do a tremendous amount of good. If you give the right person $1 billion, they can do a tremendous amount of good, create a beautiful beauty in wherever they're at. You give the other person $1 billion, they'll destroy themselves and everybody else around them. It is a tool, just like a backhoe. Mm-hmm. And I'll use this term. I know it's not politically correct, but you can put an idiot on a backhoe and they'll destroy a house. They start hitting it with the bucket and everything else. A person who knows what they're doing will dig a swimming pool and they'll have a beautiful pool with that. It's all in how it's used. Money, it needs to be taught what it is. It is not for supercars and look at me and don't you want to be me and hey, destroy your life to become me because this is where it's at. It's not. It's a dead end. And if all your faith is in that dollar, you're going to leave an empty life.
And I can definitely, speak to that because I've seen it. Mm-hmm. I have seen clients, with all sorts of level of wealth, and that does not, correlate with their happiness at all.
With the real wealth, mm-hmm. wealth of being, mm-hmm. relationships,
yep,
enjoying life,
connection.
If you love a peanut butter and jelly sandwich, and you just can't wait to eat it, and you're looking forward to it, you're wealthier than the person who's going to go eat a Chateaubriand cut of a filet and lobster up in a 100-story high tower in Manhattan for $600. You are wealthier because you're enjoying that more, and they will be miserable because it's still not going to be right, or this or that, or they see their neighbor eating some gold flake on top of their pastry. So they can never achieve it. And so that goes back to living beneath your means, being happy. I always told my daughter the most important thing you can do in your life is find the right mate. If you have the wrong mate, your life will be miserable. I don't care if you're the top paid person in the world. If you have the right mate, person beside you, your partner, your life will be beautiful even if you don't make much money because of the enjoyment.
Absolutely.
Your stress will be lower.
It's far more important. Yep.
And I know this is way off CPA, but is it?
No, it's okay. This is still really, really right up my alley anyways. Because I was going to say, I was actually listening to a podcast earlier today. I want to say it was I have a list of, ones that I listened to. And he said, and I had never heard this before, that the pursuit of happiness is a bunch of bullshit. And he said, you know why? Because the pursuit, you shouldn't be in pursuit of it. It's all within you. Mm-hmm. You just have to connect to it mm-hmm. and figure out your values and what's important to you.
Sounds like something Jordan Peterson might say.
It was not Jordan Peterson though. It was Ed Milet.
Okay.
Yep.
Okay. But these things that, and these are just Jordan Peterson's just your great grandfather with a huge vocabulary and an eloquent way to put it across.
I am reading his book now.
It's common sense stuff, but I mean, he's able to put it into a format that's very digestible, except for, with the old grandpa just saying, get your shit together.
Yeah. Jordan
Peterson makes you feel good while he's saying the same basic things, but in a much better way. Okay. But it's old. It's what we used to call Gnostic wisdom. It's wisdom. It's just old wisdom that's been handed down and watched generation after generation. When you watch this human experiment, the human condition, we're no different than the people from 1,000 years ago. When I was working at the EU, I got to work beside someone. I didn't get to work with them. They were a much bigger pay grade than I was, but I got to talk to them. They were a geneticist, worked on the Genome Project. And he said to me, do you ever wonder what your ancestors from 1,000 years ago thought? I said, yeah, it's the same thing you're thinking. Same DNA, same thoughts, same, he can say the same desires, worries, this, that, same thing, same care for your family. It's the same. Just like the grizzly bear of today thought the same as a grizzly bear did 1,000 years ago. Oh, and people say, no, but we have computers. So, same thoughts, same concerns, same desires. And that does, money is that, as a CPA, money is that controlling factor which helps to maneuver all of this through the human condition. But people get to thinking that, hey, if I have $1 billion, I'm done. I'm happy. Everything is satisfied. I've actually personally witnessed someone, for here, they were wealthy. I don't know about Los Angeles, but for here, they were wealthy, right? Ended up ODing. It was just too much.
Yeah.
Too much wealth, too much hedonism, too much good times, and it ended up destroying them. They would have been better off if they'd been born poor. They'd have lived a happier life. And that most people will go, oh, that's not true. It's absolutely true. I think we've had a discussion about, you've seen people have a little wealth and then they've come into wealth.
No wealth. And then start, growing it and become less happy as they start making more.
Yeah.
I have seen that.
When you were, how many years ago did you move to Myrtle Beach?
22.
22? Mm-hmm. What brought you to Myrtle Beach?
Okay, so I'm originally from Columbia, South Carolina. So not that I did not travel far. Okay. I am a South Carolina native. But my friend was going to Coastal Carolina, and my best friend, like my sister, and she had been wanting me to move here. And I had my son at the time, and his dad and I had recently split up, and I needed a change. So I just came here because she was going to help me. I needed some help with childcare, and she was available, to help me with that while I worked.
Did you go to school, or had you already gone through school?
So I went to USC.
Columbia?
Mm-hmm. Yep, I went there, and I made it one semester, and then that's when I moved. I was very young.
So you started going to Coastal. You transferred?
So I did not, Jerry, I did not know what I wanted to be until much later. So I was actually working for a company called New Resorts. Prior to New Resorts, I had just done bartending, cocktail serving, stuff like that. But then I wanted a normal day job. So I started working with a company, New Resorts, and I was 25, I think, when I started with them. And so what they did, that was right before the big boom, like the big market crash or whatever.
2007, 2000.
Mm-hmm. So before that, they were actually in the business of buying like the oceanfront properties and flipping them.
Okay.
So I worked with them, and I started working with an advertising agency that I love, actually did my logo. But started working with them and just got really intrigued with, doing the marketing and advertising and everything like that, even though I had no idea what I was doing at that company. I pretty much just worked on the website until somebody took that over. But I fell in love. I thought I wanted to do the marketing. So I went to school. I actually started at Horry Georgetown, and just planning on doing the bridge program, getting the basic classes. I recommend that to a lot of people if they don't, if they are going to transfer to Coastal to start there, it's going to save them money, but, so that's what I did. I started there, and I took my first accounting class. It was I never even thought about being an accountant. I wanted to be an attorney when I was growing up. My mom thought I'd be a good one because I love to argue. She said I was really good at it. So, but yeah, so I took my first accounting class, and accounting, I kind of always thought, and we had accountants at New Resorts, and they were pretty quiet, didn't really like to talk to anybody. So I kind of always had that in my head, that that's what an accountant was, just sit at your desk and crunch the numbers, which is totally not true, But I took my first accounting class, and the professor was just amazing. She was so much fun. She was so spunky. And she said at the beginning, she was like, you're either going to love it or you're going to hate it. Well, I loved it. So I immediately switched my major and then just kept on going. So then I did go to Coastal, And then I was the first of the Masters of Accountancy program there. I was the first graduating class of that.
Okay.
And then, I started working with the firm in Cherry Grove and stayed there for a long time, learned a lot, and just love it. It has its days. Every job has its stressful moments. It is definitely stressful, but I love what I do overall, the connections that I make and just being a part of every major thing that happens in my clients' lives. Like, I love that. I love that connection.
You're a very passionate person and you care.
Probably,
that's
a
rare.
little too much.
So I got to ask you though. So you wanted to be an attorney. I was going to be an attorney at one time.
I did.
And so what's your birthday? What day of the year?
July 21st.
Okay. Because you know about that numerology stuff? You ever see the guy with the backpack or the little...
Not numerology. I used to study astrology.
No, this is numerology. And it's your life path and all that. Mm-hmm. So I was born an attorney. I was born on the 1st. They're the greatest arguers.
Okay.
They're the greatest. That's what he states anyway. It's like, okay, I can see that. But so being an accountant, do you ever have the days or do you ever have the daydream of you in front of a jury box arguing a case? Do you ever still see yourself that way? It's like, man, that would have been great to be into that position. And I know that's not all what attorneys do. It's just a lot about what that's in the movies. It's a lot of paperwork. It's a lot of research. It's a lot of negotiations behind the scene. It rarely gets to court, but still.
Yeah. So remember do you
have that fantasy still?
When you tripped me up on the movie question to start this,
yes,
I was leaving out and I told Heather I left out one of my other favorite movies, A Time to Kill.
Okay.
Have you seen?
Yes.
Did you see that?
Matthew McConaughey.
Matthew McConaughey and Samuel L. Jackson.
Yes.
One of my favorite parts of that movie that gets me every time is his closing statement.
Yes.
Everyone
close their eyes. Yes. Yep. Impactful.
Yes.
And a great. There are different attorneys. There are different kinds of attorneys, and there are trial attorneys, and then there are non-trial attorneys. Trial attorneys, by and large, are great actors. They have to convince that jury of 12 their side. So it's not just cut and dry. Here's the facts. You deliver it in a way that's emotional.
Yeah.
As like Matthew McConaughey in the movie. Like the conflict between Tom Cruise and Jack Nicholson and A Few Good Men.
Yes.
There's emotion there. You're beyond facts now. You're into emotion. And what drives the average person? Emotion. Mm-hmm. It's not logic. There's only 2% of any given population that derives any thought process from logic. Everybody will tell you they're logical, but that's not true. 98% of the public is emotional, and it's a delineating curve of emotional, or you can call it a graduating curve, whatever you want to do, but where they start to make decisions off emotions instead of just strict logic. Strict logic would be like an alien would think of things. No feelings. It's just the way it is. It's the law. It's the way it is. So that emotional component really plays in. And a good friend of mine was an attorney here, Fred Harris. Phenomenal trial lawyer. He's a phenomenal actor. And I've found that correlation. They're great actors. They know how to convince a jury with fact, but still it comes across so much more powerful when you deliver the message properly. As in a movie, can you imagine watching the movie with Matthew McConaughey? What was the name again?
A Time to Kill.
Time to Kill, and having him go, okay, would you just close your eyes and imagine it's not a white kid, it's a black kid. It would just be like, oh, come on, that's so flat. No, it's the way it's delivered. It's the score behind it. It's everything. And so it goes from being, it would still be an emotional thing, but not near to pulling all the strings of the emotions.
Yeah.
Do you ever imagine yourself being in front of that jury, delivering that closing statement?
So that's actually the part that I wouldn't be able to do. We talked about this, a little afraid of those audiences, But so I really wanted to be a trial attorney because love those moments. But then going kind of back to what we were talking about with money when I was younger, I wanted to be the attorney that made the most. So my goal was international law. Mm-hmm. And I had studied, another odd thing about me, when I was really young, I had been teaching myself foreign languages. So Italian, Spanish. No, I do not speak any of them fluently now. Okay. But when I was younger, that is actually what I did for fun. And we didn't have Babbel or any of these other things. Like I was literally picking up books and trying to teach myself. Yeah. Yeah. So I really wanted to go, I wanted to travel and go into international law because that's where the big bucks were. You know, trial attorneys, if you're not the best, you really don't.
No, you make money, but it's not the big money. Don't knock out estate attorneys.
Yes.
Because when they deal in big estates, they're getting a piece of that big estate.
I didn't know anything
we're talking about
estates
of like $1 billion,
yeah.
A couple $100 million. They're getting a big chunk of that. And it's still a litigious area, but it's not as combative as criminal law. And
right.
You're dealing with someone's money, but you don't have their life on your hands.
Well, and that's the thing too, especially with, you know, the type of person that I am. I know I couldn't handle that job. Like knowing, you know, certain things about people and having to still do your job without being emotionally involved would be very difficult for me.
It would be, and it would probably eat at you more than what you'd think because you've got someone's 100%. Life in your hands.
Yeah. Yeah.
How you deliver this statement could make the difference of the jury going back, deciding one way or another, and that would lay heavily on you.
Yeah, I would not be the person I am today, obviously. So yeah, I did want to do the international, like corporate law because it sounded glamorous, a lot of money, traveling and everything like that. You know, that was my young mindset too. But my son came along and changed those traveling plans real quick, you know.
So you came to Myrtle Beach, but you'd probably been here as a kid since you were from the state.
My parents got married here. Yes, my parents got married here. We came here every year, every single year growing up.
Well, I think
it looked a lot different back then.
Oh, it did, didn't it? We had this conversation before. I said, you know, I want to ask you about, hey, living in Myrtle Beach, and you know, do you like the beach? And you're like, well, I don't go that way. The people who live here, they don't get to go as much as the people who vacation here, and it's a shame because it's a beautiful coastline, beautiful.
It is
fun to swim
and I love it when I can't
find the time, and it's because you're always busy. That's why you got to get wealthy and get an oceanfront house so you can just walk out the door in the day or night or whatever.
Goals.
Right there.
Goals.
What is some of your fondest memories of Myrtle Beach, either as a child coming here or when you first came? What makes you smile when you think of?
Definitely the trips with my parents. It was always my parents, and they had some really close friends. Like one of them I considered, you know, my aunt and uncle, even though, you know, not by blood, but they were. So we did have those really fun trips. And I remember one time, like they had been on the beach. Everybody had a good day. Now I was young, so I didn't realize how much of a good day they were having.
Now, when you were young, how old? Let's give a reference here.
I want to say like 8.
Okay.
8 or 9.
8 years old.
And donuts had to be had. So it was like 2:00 in the morning. They had been everybody had been up playing cards, including myself, and it was time for donuts. So my dad had to go and like find donuts.
Krispy Kreme.
Yes.
24-hour donuts on 20.
Yes.
What is it? 29. Where's that, Heather? 17th? Yeah, 17th Avenue North. You'd have a line out the door at 1 and 2 in the morning.
Yeah.
I miss old Myrtle Beach, Ackles. We used to go down there at midnight, 1 in the morning. The place was packed with families.
We did too.
With families.
Yep.
And when I moved from here back out west for a while, and that's the one thing that I really missed about Myrtle Beach was a late night town. And when I say late night, families are out and the pancake restaurant is full. And people are like, oh no, I moved to Scottsdale. I was a pastry chef out there for a while. No, that town closed down at like 9 o'clock. And it's like, it's part of Phoenix. It's like the whole place is dead at like 9 o'clock. It's like, no, Myrtle Beach is just getting going. People are eating. Then they're going to go for pancakes, strawberry waffles at Ackles at 1 in the morning. Yes. And then if you went out drinking and went to the clubs or something like that, you went to Krispy Kreme and you gorged yourself on these hot, was it hot now? The sign would go up.
Yes.
And they're coming out of the fryer later and everybody would line up. But at 1 and 2 in the morning, there would be a line out the door.
Oh, yeah.
In the summer.
Because this was that kind of town. I mean, this was party town. Like, so I came with my parents, and then obviously as I got older, I started coming with my friends, you know, every year. We had like first week. So the first week every year that we got out of high school for the summer, you know, we were down here. My parents actually chaperoned that trip one year. that was something they would not do 2 years in a row. But yeah, so those were also fun times. You know, we were down here for the whole week, and it was everybody from all the high schools, and you know,
and you'd come across people you knew from where you were at.
Yeah.
And there was a freedom. I remember when I had my bakery, patisserie, and cafe. They built a Applebee's and Fridays, like flanking where we were at. I wasn't worried about the competition, but I was so sad. It's like, here comes the corporations. Here's the end of Myrtle Beach. It's the end of Myrtle Beach as we knew it. The late night, the this, the that. It's going to become a corporate mentality. Everybody made enough money in Myrtle Beach. Not everybody. The restaurants and all the hospitality industry made enough money from April till October to shut down through the winter. And occasionally we'd all meet down in Key West or in Miami and hang out for 3 or 4 weeks in the winter.
Yeah.
And everybody had enough money. Bills were very cheap. It was easy to live. You could live several blocks from the beach you could rent a place for $350 a month, 2-bedroom. Your utility bills was like $40, $50. And we were making good money.
Yeah.
And you made it in the summer. When the corporations hit, when the multinational corporations hit, I knew it was over. Because it did. It cut that pie smaller and smaller, and then they started pouring in, and now everybody's struggling. And you knew it was coming. I knew it was coming. With economics, understanding economics. There was a freedom that disappeared. You could open up a restaurant. If you went to college, you go to tech. You mentioned tech. Mm-hmm. Best bang for your buck of a school I've ever seen.
I loved it. I loved it.
Their culinary school, for the price, second to none. Second to none. And now it's a big program. I was the first 2 years. You said you were the first master's for accounting, CPA. Mm-hmm. We did the first. My class did the first 2-year program, so we got to make dinners for the governor and all that because we were trying to get into a 2-year program for culinary school at Tech, and my class was the one that took it from 1 year to 2 year. So much practicals with French pastry, with the real pastry chef, real chefs, because you're trying to get the accreditation to become that. Mm-hmm. Doing ice sculptures, staying late.
Did you work with Eric Wagner?
No.
Did you know him?
Sheila Frick and Bill Lassiter this was in 85, 84, 85, okay, 85, 86.
He came behind that.
He was behind that. And I almost became the pastry instructor. They wanted me to, and it was the same week that converged when the bakery came up for sale. Because I'd started Hard Body Cafe, which was smoothies. I don't know if they were the first, but mixing fruits and egg white protein and stuff like that. So Ted and Nancy allowed us to open up a counter there, and we did health food. And then I designed a shirt, Hard Body Cafe, which we sold a crap load of them.
I love your shirts.
Thank you. There's the old Oneidas I still have some of my closets. They've discolored a little bit, but they're still just as good. They were called Oneida. It was made in the United States back, this was in 89, 1989. Anyway, I went from that, and then this bakery came up for sale that I've been wanting. It was really good. People had went in and put like $500,000 into this place, and they really didn't know what. I can say this now. They didn't have a clue to running a restaurant. They found some lady who was a pastry cook, not a chef, but a pastry, and she knew how to make some good cookies. So they all the who's who of a couple of the families, well-off families, put together, and they dumped like $500,000 in this place. It failed, and you've seen it failing. So I went in and offered them. I didn't know how I was going to pay for it, but I made them an offer that I didn't have the money for because I wanted it so bad. And 3 months later, she didn't take it. 3 months later, the Eric Ficken, who used to be the mayor of Myrtle Beach, called and he said, "You still interested?" He was one of the partners. He said, "You still interested in the bakery?" I said, "Yeah, but now it's a failed business, so I have to overcome the name." And I knew how much I had, and I offered him $26,000. They took it. So I got $500,000 worth of equipment for $26,000.
Wow.
That's how I got my start. Still stressing. It's like, man, I don't have that much. I gotta make this. By the time we opened, I had to remodel the place. I had $200 left to my name. That was it. And I owed, it was like $1,400 or $1,500 rent in 2 days.
Oh my gosh.
Stress. I didn't. Honest to God, I didn't sleep for 3 days. I was sick to my stomach when we opened. If someone would have come along and said, "You know what, I'll take over the lease and I'll give you $5,000, which was not as much as what I had," I'd have probably taken it because I was sick to my stomach. You were pushed to the edge. It comes from not having backing. You know, a lot of people have backing when they go into business, families that back. And so you didn't have it, but you had that so much drive to get it. And when we opened, we had a line out the door. And it was just great marketing. And plus everything we made, you've had some of my pastries.
Yes,
and
so good.
It all started at Tech. It all started at Tech. And the pastry chef there who worked she was a pastry chef over at the Ritz-Carlton in Paris. Her husband was a pilot for the United States Air Force. She took a liking to me, and she's seen that I was a perfectionist. So they actually had secured me a position at the Greenbrier, the White Sulphur Springs. That's where all the president and all that, they vacation up in West Virginia. So they have 2 or 3 apprentices a year for pastry chefs. And they got me a position there because I was good, right? Real good. And they said, we don't want to lose you here, but you really need to go here. And couldn't afford it. Because it's an apprenticeship, they paid you like $1.50 an hour. Couldn't afford it. I couldn't afford to live there. I had no backing. I had no one to go to say, hey, yeah, we'll cover $400 worth of rent or $300 worth of. So always with the lack of backing from the get-go, I can tell anybody, if you have children, have their back. And if you can't, find a way. Find a way to have their back if they're driven. I'm not talking about have their back to watch Netflix and chill.
Right.
If you have a driven individual as a child that's a professional and they're really hard, have their back. That one little incident can cause a huge difference in their life.
Absolutely.
So had I went there, I would have been making pastries for the president. Who knows? Would I have been the pastry chef at the White House? You know, because I was one of the top-ranked pastry chefs in the United States after time. But it would have opened doors and you would have met people, right? That all goes back to economics. It all goes back to understanding. So have that, you know, and it doesn't take that much sometimes. Just, hey, I'll get your rent. Don't worry, you pay half of it. We'll get half of it, whatever. But took a liking to me and said, you're really going to excel at pastries because you're a perfectionist. And they said, your big hands it's something to watch your hands with the little pastry bags making swans out of chocolate and stuff. But, and it did. I was a good chef, but I mastered in pastry because it's kind of like being an accountant or a lawyer when you're talking about international law versus a trial lawyer. 2 completely different lawyers. And 2 different mindsets,
Absolutely.
2 different disciplines. But this all goes back to you're talking about Krispy Kreme in the middle of the night. I can't tell you, Heather and I 14, 15 years ago, we'd be down at the Mexican restaurant at Fiesta Mexicana, one of the best restaurants in Myrtle Beach. I mean, there is nowhere like if you're feeling down, go there. You will be a different person when you leave because they treat you like family, and the food is so damn good.
So good.
They actually make their food from scratch, which is rare. But you go down and then you go to the movies, you go to the beach after you have a pitcher or 2 of beer, and I don't drink anymore.
Neither do I.
And we had that discussion after we both. You didn't have COVID, did you? Or did you?
I never tested for it. I've never had symptoms for it. My kids have had it. My husband's had it. We did not separate while any of them had it. And I've just never.
So maybe you got it and didn't have
Yeah.
But I found that so many people, do this experiment if you're out there listening. How many people do you know that, not drunks or alcoholics, but people who socially drank? Just a beer here or 2 or a mixed drink or whatever, but not a full-blown alcoholic, but someone who just liked to have a drink here and there. They've stopped. It doesn't set well with them anymore. I have talked to so many people that we had some people over for dinner and they're like, oh, I knew she used to drink wine. And I was like, well, what kind of wine do you drink now? Well, I really don't drink anymore. I have talked to so many people. It doesn't set well with me. I always have like some Warsteiner or something in my refrigerator. I throw it away in a year. I get another 12 pack. I throw it away in a year. And maybe one's gone and we'll split one. And I miss having 1 or 2 beers because it tasted so good, but it just doesn't set well anymore.
And I've heard that from a lot of people as well. And that's one of the many reasons, that I just no longer wanted it in my life is because it doesn't make you feel good. But I've talked to quite a few people recently who I really didn't think would, ever cut it out. And they've stopped too. Same thing, just for health reasons.
Must have been something with the COVID and I never got vaccinated. So doesn't have anything to do with that. But Going back to the Krispy Kreme donuts that you talked about, did you ever have a few and then later start craving one of them Krispy Kremes in the middle of the night? I know you're an early morning person, but
I'm an early morning person, so no, I don't think I've ever. I don't know. Probably.
Oh, we did. We did. You have a few drinks and then like at midnight, oh man, we need a donut from Krispy Kreme coming right out of the fryer later.
That's what was happening with my parents. That's for sure.
So, but the old Myrtle Beach, there was a freedom, and it was
so different. Gosh, it was so different. But you know, even when when I was in high school and would take the trips down here, back then, I mean, you could get into any place around here, you know, with a fake ID or whatever, you know, really back then it was fine.
Right.
As long as you had something.
Right.
So yeah, there was a lot more, you know.
Leniency.
Yes.
And that leniency is freedom. And with
nothing, we didn't have, you know, there weren't a bunch of shootings or anything, you know,
none.
like everybody was fine.
None.
No.
None. And that's a whole nother show in itself to discuss those type of topics.
Yes.
Because when I went to high school, there were guns. Hell, you take a rifle in and set it in your locker. If you're going to go shooting later on, you just set it in your locker. They're hanging up in the back of a truck, in a car. People go hunting in the morning. They went hunting last night. Just leave it in there. Not one person ever went and got a gun. We had plenty of fist fights, but no one ever got a knife. No one ever got a gun.
No.
And they were available everywhere. I mean, in lockers, in cars, loaded. Teachers didn't, but no one ever did it. Our society has changed so greatly. And it's, I told you we weren't going to get off on that. That's my other show.
I know. I tell you what, we could sit here a long time.
But Myrtle Beach, to me, was so special. And really, when you leave here and you realize it still is special.
I love it here.
We're just living here, so you kind of go, well, I know, but how free was it in the 80s and this? It still is compared to almost everywhere else, because you leave, you go there and you go, my God, I want to go home. I want to get home. I want to get back to Myrtle Beach.
Yeah.
It's laid out extremely well. I've always said you can get to Costco, Sam's Club, Lowe's, Home Depot. You can get to all these stores within like 10 minutes. It's all flat, all grid pattern. We live on a beautiful coastline. It's still very reasonable compared to the rest of the United States.
Weather is great. I mean, really, even the, you know, during the hurricane season, we really come out pretty well for the most part as far as that goes.
Knock on wood.
So far, yeah. Not saying that can't change, but I mean.
Yeah. I mean, eventually sometimes one of the hurricanes will hit here that's pretty hard. Maybe. But it's you have natural disasters everywhere out west. You have forest fires, you have earthquakes. The Midwest, you have tornadoes.
Tornadoes can't do.
So it's very rare that you can find any place on Earth that's kind of super stable as far as the Earth goes.
Well, and then like we were, you know, talking about to start, I mean, South Carolina is great as far as property taxes and income tax and everything like that. You know, cost of living here is
still reasonable.
Yeah.
And I think that's why there's so many people moving here.
Absolutely. We're seeing it a lot.
They're seeing the benefits. I've often wondered, here we are in Myrtle Beach. And Myrtle Beach is one of the top, if not the top destination on the East Coast for tourism. Orlando, I'm not even sure. I think Myrtle Beach has surpassed Orlando. I don't know. It's going to be close. There's like 18 million people come here a year. You could buy a house between the avenues, 38th to 76th, 78th, the north end of Myrtle Beach. Ranch-style home, built well, built in the 60s, 50s, 60s, 70s. 70s when buildings started going off the rails. But you're actually a short walk to the beach. You're only like 800 yards or 1,000 yards to the beach or 1,200 yards to the beach. And up until this last run-up, you could get a home in there for $250,000. Everywhere else in the United States close, I don't care if it was in Oregon, wherever, anywhere that close to the beach was going to be $600,000-700,000. Yeah. And we have one of the best beaches to play in. Like, if you want to swim, it's a great beach to swim in.
I love it.
Ocean.
Yeah.
It's warm. It's not real rough. And so I always thought it's a hidden secret, and especially with the A-tax money that comes into Myrtle Beach and I know there's a lot of controversy around that, but for the homeowner, that's their primary residence, property tax bills are extremely low.
Extremely low. Yeah. I know. And I get to see them from all over. Like there are none lower than where we are.
Don't tell the leaders that.
Another great thing about Myrtle Beach is that we do really have people from everywhere too. Mm-hmm. You know, I mean, when I first moved here a long time ago, I had a strong Southern accent. And everybody asks me now, well, you don't sound like or they, you know, comment to me, you don't sound like you're from South Carolina. It's because almost everyone I know is not. Like when my husband and I first moved in our house, we've been there since 2006, but everyone was we had Rhode Island, New Hampshire, Pennsylvania, New Jersey, Boston, you know, I mean, it's rare to find like South Carolinian around here.
It is, especially in the Myrtle Beach area. The farther you go inland, the more it gets back to the base of people who families have been here for 100, 200 years. But along the coastal regions, it's a hodgepodge from all over the place.
Yeah.
I discussed this with someone else on the show about the amount of talent coming in here, retired talent. People who have had businesses, people who've been at the upper end of certain industries that move here to retire. There is so much talent here. And to me, if it would be a neat thing to organize those people and put the brain power to use instead of just setting.
Yeah.
Help people start businesses. Have a foundation that helps people start businesses.
And you know, consulting businesses, that is definitely a growing industry right now. Consulting is really, really becoming very popular. You know, for several reasons. We want our information faster. So why not go to somebody who already knows? You know what I mean? Who has experience and everything like that and get your information that way. I've seen a lot of consulting businesses starting to come up.
And people coming into a new area, like they've moved to Myrtle Beach from, you know, a couple states away. They come here, assimilating into the arena or where they want to go because, you know, each housing development's a little bit different. Where you want to live, what you want to be around. I'm not a lot of people are, but I'm not a huge fan of HOAs. I like freedom. I'm an extreme freedom person.
We've talked about that. Yes. I'm not a fan either, but I do live in one.
Right.
Yes.
But I do understand their principle as far as protecting the way it looks and making sure people keep 100%. Their stuff up. But I want to live around people
boundaries.
I want to live around people who have natural boundaries that will keep their place up on their own without having an overlord tell you what to do.
Yeah.
And so that's a rare thing to find anymore.
I know, it's crazy that we have to have someone tell us that.
Yes. Yeah, we didn't used to. That's another story. You know, you used to leave your car keys in your car overnight and no one would bother it. But having someone like yourself that's a CPA, they know, for lack of better terms, the tricks of the trade for the area of things that are going on in different areas, the industries that are going on, the businesses that are going on. Is that something that if people was to get a hold of you, that you would obviously help them with their tax situation coming in, but to, how would you put that?
So I think I got you. So I can help with tax, you know, obviously the tax situation, and I can help with all startup and intricacies depending on whatever that business is, as far as if they need sales tax registration, payroll, et cetera.
They're coming in to start a new business and they need
I can guide them. Yep.
Business licenses, all
of that. And
is that something you do for people?
Absolutely. Yep. So, we can handle all of that, you know, as long as they know what it is that they want to do and steer them in the right way. It's actually great if I am able to start out with that person and help them, you know, set everything up and know ahead of time, instead of, you know, them maybe missing some steps along the way and ending up in a situation that, you know, we've seen before where things aren't done properly.
Right. Well, I want to have you back on here. We got a lot to talk about, and I know it's running late.
We can go on for a long time.
You and I communicate at like 4 or 5 in the morning. I'm going to sleep, getting ready, not sleep yet, and you're getting up, so we can communicate at that point or other point. But I wanted to ask you about your bodybuilding journey. I know you say you're not a bodybuilder.
I'm not a bodybuilder.
Okay, but you're building your body. So technically,
fair enough.
Okay, so you've started working out real heavy, intense.
Yeah.
Not just going to the gym for 20 minutes on the treadmill.
Right.
And so you started lifting weights. What has that done for you in business and personally?
Okay, so I have always, maybe, gone through sometimes where I wasn't physically active, but I've always been, pretty active outside of my sedentary job, I used to be big into like high intensity training, and I used to go with the trends. There would be like, I think I did Taibo was really big when I first had my son, like when I was trying to lose that weight or whatever. So a lot of in-home workouts and stuff like that. But I have learned, that I've learned how important skeletal muscle is for women, especially as they're aging. And it's something, we've always, like, I grew up with the mindset that, skinny is better and everything like that. But when I first started lifting, it really was just the stress level of starting my own business and dealing with quite a bit going on that year, and decided I had to focus on something. And I had run in the past, but then had taken a couple years off just because just kept getting injured. And so I started lifting, and I had no idea what heavy lifting did for the mind. Really does, just that mind-body connection, really getting you in tune, and really just sets the tone. So I first started working out in the morning, just at, 5:30. But with running this practice, my workouts were getting longer. So my workouts right now generally run an hour and a half to 2 hours. Now that does include like stretching, like warm up. I do spend time with that. I think is very important, and some other things that I like to throw in there to, my fitness goals for whatever, 6 months or whatever, working on handstands now. Might have to let that one go. But so I do spend that time in there, and that's my time. It's my time to, just get my mindset right and everything like that, because a lot of stress comes with the job and just life in general. So it's just been a huge transition, and the lifting is just, I had no idea I would love it so much.
It's a big stress relief.
It is.
Especially intense workouts.
It is. And just seeing what your body is capable of.
Mm-hmm.
Again, I do a little bit more bodybuilding functional training, so I'm not doing any kind of powerlifting or anything like that, but it's really great to see, what your body is capable of.
And it makes you feel better.
It does. It does.
You feel better, just physically, mentally.
Absolutely. It does. It's the best drug.
Yes.
If you're going to be addicted to something, that's what I've told my kids. Let it be this.
Yes.
Yeah.
It's healthy too.
Yeah.
And you look good. So it's a big benefit.
Yeah.
And, really, truly, when you do look good, you feel better. You look in the mirror and you go, well, I look better than I did last year. I feel better. And you're more confident. You're more.
Well, progress is everything, you know, and I mean, everything with everything, but especially with this. So obviously seeing that you have reached one goal, or seeing your body change and everything else that comes along with this. Yeah, it is. It's exciting to see, and the thing is you just, by feeling better, I do believe, and I know it's out there that, there's a strong connection between physical and mental.
Yes.
So it helps me a lot. But yes, so now I get up at 3:00 in the morning because my workouts are pretty long, and I still want to get back, and I have to eat a huge breakfast. So I have to have time for that. Eggs. Yeah. Yeah. My 19-year-old is now getting really into it, and he's trying to get his calories up because he's trying to put on muscles. So we've got his calories pretty high right now. So between the two of us, we're going through like 3 dozen eggs a week. Mm-hmm. No. I'm sorry. 3 of the ones from Costco. So 6 dozen eggs a week.
6 dozen.
Yeah.
Now, do you shave some of the egg yolks and just go with some whites, or do you go all yolk, all egg, or is it a mixture?
It depends.
Or all white, I mean.
Right now. Originally, I was doing like more egg whites, but right now I'm doing both.
The yolk's important, and when people are starting out, they just go with egg whites. Yeah, it also helps to metabolize the protein. There's a reason for nature making it that way.
Yeah.
It's just like my favorite protein powder is just egg white. I'm not into the whey.
Okay.
Egg white protein, and it assimilates well, and your body will dictate what protein is best for you, and different genetics.
Yeah,
different
I've
protein.
definitely had to be. I've had to change brands a couple times. The one that I have now it's a whey isolate, but it's with like digestive enzymes and stuff like that just to help me. But I don't do too much of those. I really try to get my protein from food, animal sources.
What's the best?
Yeah. So I really only do that to supplement.
There's a reason that it's called supplement. You can't live off supplements.
Yeah.
It works in tandem with what nature gives you.
Yeah.
So I like taco isolate. Have you ever heard of that? You isolate the tacos and eat them all.
Oh, I love tacos. I love tacos.
That's what I'm into. I'm into bodybuilding, but shifted from here to here. No,
well, that's the thing. Like
we were talking about ice cream the other night.
I love bodybuilding, but I love food just as much. You know, like I love my lifting, but I'm not. It also does make you hungrier, but I'm also like, I just love food, and I don't.
That means you're a real. I honestly do not understand people that don't like food. Like if their taste buds get hit, I understand there's some people that don't have taste buds. Something's happened, or they don't have them.
Yeah.
One quick story: there's a guy named Louis Osteen who was one of the best chefs in the United States. Used to be in Polly's Island, then in Charleston. I believe it was his wife went to get a tonsillectomy and lost her taste buds. So you're married to one of the best chefs in the United States and you lose your taste buds. You talk about living in hell. You talk about living in utter torture.
That's rough. That is rough.
But
isn't it ironic?
Isn't it though? I mean, you got one of the best chefs in the United States and you don't have any taste buds. When I had the COVID, I lost taste buds for I wanted to actually strangle the person who was working on that thing in the lab. I did. If I lose my taste buds for life, I want to hunt someone down. It was. You don't enjoy anything anymore. Everything tastes like cardboard. Just nothing. It didn't matter what it was. You could put hot sauce on your tongue.
That's how we knew that everybody in our household had it, except for me, was the lost. Yeah, they couldn't taste their food.
Couldn't smell coffee beans, and that's what I kept doing because they kept saying train your nose with coffee beans, retrain. But I've got the Chateaubriand, which is the center cut of a tenderloin, sitting upstairs, 1.5-inch cut. I trimmed them last night, so this is what we're going to have. It's going to be a beurre blanc sauce, a creamed beurre blanc sauce with wild Australian Chardonnay. Deglaze the pan with some wild mushrooms, some shallots, and some garlic, creamed, and some green beans almondine. You said you love green beans.
I love green beans.
And some Tuscan rustic potatoes. I'm starting to lose my mind. I'm starting to think about the steak. I'm starting to see that sauce simmering in the pot. Yeah, I'm getting hungry. I'm sure you are too. So we're gonna go get some food here. Have some great food because that's what should always be in front of or at the end of any great conversation.
Absolutely.
Food, yeah, and we don't cook enough. People don't cook enough together anymore. I miss potlucks. People bringing dishes.
Yeah, we used to do that a lot. Yeah.
No and it's a way to get the community together, and people should do that again.
Yeah.
Go meet their neighbors, and food can solve a lot of things. You can take two people who don't kind of get along politically.
Food should make everybody happy.
And everybody sits down to a great meal and it's kind of like it dissolves, as long as it's not too far on the end of the spectrums.
Yeah.
So
yeah.
Well, thank you for coming in.
Well, thank you for having me, Jerry. It's been fun.